Hi everyone, welcome back to this week's Technical Insights. The NASDAQ Composite Index ended last Friday lower, and it notched its second consecutive losing week in 2023 as the semiconductor stock declined. Tech-heavy NASDAQ fell about 0.6% to end at 13,644 points, pulled down by a sell-off in the semiconductor stocks such as AMD, Nvidia, and Micron. The S&P 500 slipped by 0.1%, ending at 4,464 points. The Dow Jones Index, on the other hand, jumped 105 points or 0.3% to close at 35,281 points. The 30 stock index, Dow Jones Index, was helped by the advance of 2.1% in Chevron, a sign that the recent tech rally is overflowing to the other sectors of the market. For the week, the S&P 500 and the NASDAQ declined 0.3% and 1.9% respectively. Both registered their second straight losing week, a first of that length for the tech-heavy NASDAQ since the conclusion of the 4-week losing streak in December 2022. The Dow Jones Index, on the other hand, is the outlier among the three major averages, the only one ending in the green and advancing about 0.6% for the whole of last week. Traders and investors were celebrating earlier in the week as JP Morgan strategists advised investors to stick with stocks following the July CPI report. In July, the Consumer Price Index, a major inflation reading for the market as well as the Federal Reserve, came in softer than anticipated on a year-on-year basis. Prices climbed 3.2% on an annual basis, less than economists expected of 3.3%. To be sure that the CPI reading shows signs of stickiness, the core CPI, which excludes food and energy prices, rose 4.7%. However, the cheers was short-lived. Inflation data released on Friday complicate the picture further. July's PPI index, which tracks the price of wholesalers pay for raw goods, rose 0.3% from the previous month, whereas economists surveyed expect a 0.2% increase month-over-month. On the Singapore stocks, which ended lower on Friday, the benchmark STI Index fell 0.86% or 28 points to close at 3,294 points. Losers outnumbered gainers 319 to 263. For the week, the STI Index was down 0.3%. Regional indices were largely in the red on Friday. The Hang Seng Index fell 0.9% or 173 points to close at 19,075 points. The Hang Seng Tech Index was down 2.39% or 104 points to close at 4,273 points. On Friday, the top loser on STI was UOL, which fell 2.9% or 20 cents to close at $6.74. The Property and Hospitality Group posted a 63% fall in the first half net profit to 135 million due to significant lower attributable fair value gains on its investment properties. Meanwhile, Genting Singapore was the top gainer on the benchmark index, rising 3.8% or 3.5 cents to close above the 95 cents mark. The integrated resort operator posted a first half net profit of 276 million, more than 3 times than the earnings from the same period a year ago, due to the higher number of foreign visitors arriving into Singapore. So for this week's technical analysis, let's look at both the charts of UOL and Genting Singapore. So for UOL Group, the stocks has been in a range-bound trend since the beginning of the year, but it has recently bounced off its support at $6.25 on the 27th of June. The RSI for UOL Group is starting to trend downwards, with the latest reading at 45 breaking the 50-point neutral mark. The MACD line has also crossed below the signal line last Friday, which is a sign that the bounce we saw in June has lost its momentum. The price bounced off its 50 days moving average at $6.67 and managed close above the 200 days moving average of $6.60. On the trend analysis, connecting the low of October 2022 as well as the low of March 2023, you can see a pretty prominent uptrend line, which is recently tested on 27th of June, and it has a very strong bounce off that uptrend line, which proves that the uptrend line is still pretty much intact. So overall, the outlook for UOL Group is slightly negative. as the RSI has break below the 50-point neutral mark, which means that momentum is likely to be weak going forward in the near term. The MACD line has also crossed below the signal line, another sign that momentum is losing its strength. However, key support can come in around the $6.40 level, which is in line with the uptrend line that you saw. And also the recent low of $6.25 could provide further support for UOL Group. Near-term resistance continue to stay at the recent high around 1st August at $7.14. Next, let's look at Genting Singapore. Genting Singapore stock has been in a downtrend since hitting a high on 4th of April at $1.17. Prices has since fell below its 200-day moving average of 96 cents. Last Friday, Genting Singapore managed to close above its 50-day moving average of 94 cents. The RSI is starting to trend upwards, with the latest reading on Friday at 57 above the 50-point neutral mark. The MACD line has also crossed above the signal line last Friday, and this may signal the beginning of an uptrend if both the MACD line and the signal line can cross above the MACD zero baseline. With the gap up that we saw last Friday, possible support can come in at the 20-day moving average or the Bollinger Band basis at the 93 cents level, with the lower bound of the Bollinger Band providing further support at the 91 cents level. Resistance will be the high that we saw on 4th April at $1.17. So that's all I have for this week's Technical Insights. If you find this useful, do give us a like or a share, and I'll see you again next week in the next Technical Insight.